You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. It is time to rock. It is time for the option block. My name is Mark Longo. You guys know the drill. It is Monday, right about noon Central Time. Time for us to go live with this fun program. You also get it, of course, on Thursday at noon Central via the old Mixlers. That's, of course, 1 p.m. Eastern. Or just get it on your podcast platform of choice, sometimes later that same day, sometimes earlier the next morning, whenever my team gets around to putting it together. We got a lot of, spoiler alert, we got a lot of audio hitting the network these days. If you haven't noticed, if you're not a subscriber, first, you should subscribe. It's free. And then secondly, we keep you busy with a lot of great content, including the option block. And of course, however you listen, live after the fact, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do indeed like to hear from you guys. And speaking of me, of the show, who's joining me here, let's start off with, let's go out to the hinterlands, to the land known as St. Charles, where we are joined by none other than Uncle Mike Tosaw from the appropriately named St. Charles Wealth Management. Uncle Mike, how goes it, sir?
All is well. Every day's a holiday. Every meal's a feast, as per usual.
Glad to hear it, sir. I think we're also going to get some of the pit crew joining us in a little bit here once they get themselves all sorted out. But we're not going to wait for them. No. Let's keep on rolling right on into the maelstrom that is the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we talk about what's trading, what's going on, what's lighting things up. And as Uncle Mike was joking at the front of the show, the markets are up, if ever so slightly, and it kind of depends where you look. You kind of have to cover one eye and kind of squint, but then you can say, yeah, everything's up for the most part, as long as you cover that pesky NASDAQ. But as we're recording right now, streaming live, excuse me, the Dow up ever so slightly, third of a point. The S&P borderline unched up about 0.1% or so. The tech-heavy NASDAQ is where the blood is in the water today. That's off about 1%. So Uncle Mike can't really, his adage, his axiom doesn't really hold for the NASDAQ. Let's just ignore the NASDAQ. Everything else is up, including VIX Cash, up about a full handle. Or for all of you percent of percent fans, if you hate it, just cover your ears. 5%. Oh no. Spoiler alert, it's a percent of a percent. I know it doesn't make sense, but it's kind of fun. And it tweaks to the people who hate it, which makes it even more fun. So it's an interesting mix. Again, it's kind of one of these mixed days out there where the tech market, tech land is just getting slaughtered. We see, Google off. We see Alphabet off, aka Google parent company, just blood in the sands. Our old friend Tesla off nearly 10 handles. So just a beating pretty much wherever you look here in Techland. Apple off 7.5 handles yet again, back below that magical, mythical 200 level, 199.91 as we speak here. So that's quite a bit of a sell-off here going down here in Apple land. So apparently Friday wasn't enough. The post-earnings drubbing wasn't enough. It was so that's off, about over 3.5% now in Apple land. So that's also obviously where a lot of the drubbing is coming. Uncle Mike, I could probably guess what's catching your eye out here, but regale us, sir. What is catching your eye? Maybe we'll start with your old beloved fruit company. Has all of this kind of red in the water there? Has it changed your outlook? Anything going on in the fruit land for you guys?
Well, I mean, we still have it as a holding in the strategic night, so it's definitely something that we're still a part of. Today is based on a downgrade from everything that I can tell with Apple. It got downgraded, and the person who downgraded Apple, any analyst that would have the courage to do such a thing, they're going to be, I'm not sure where analysts meet or what analysts do, but in the secret dark corridors of analyst land, that guy is not going to be very well liked by the other analysts that have things to where they have people that are in a lot of Apple for right now. So with that, we always have kind of our own little view of analysts on this show. I don't want to get into that right now, but it's typically not very favorable. But with the Apple downgrade, that definitely is something to be said for that. I think that's the main driver of what's taken down the NASDAQ. If Apple, the largest company in the history of the planet, is down 3.5%, it's very difficult for the NASDAQ to have some positive momentum on it. But on their financials are doing pretty well today. Not on the NASDAQ, but on that note, financials are doing pretty well today. XLF is up 1.3% on the day. We have some nice movement to the upside in energy stocks. We also have some nice upside movement in consumer staples as well as utilities. So a lot of positive things going on in the marketplace. This just can show you, though, how when the right people say the right things, it can definitely have an effect on the market, or the wrong things, depending on which side of the trade with which you are on with this Apple downgrade. So a lot of positive things going on. I think that with tomorrow, of course, is going to be a pretty big day with the midterm elections. So with the rest of the with that in mind, about halfway through the trading day today, a little bit more than halfway through the trading day today, I don't know if we're going to have a lot of overall market movement per se. We could, you never know, but I think the next big thing that the markets are waiting on will be this thing called the elections tomorrow. And if you guys haven't voted yet, I'd encourage everyone to get out there and vote, whatever side of the aisle you may be on, or if you're not even part of the aisle. I'd encourage everybody to vote.
Yeah, it's good. Well said. We said that on Twifo last week as well. You've been on some shows with Nick Howard of our Twifo infamy and Bantix. His wife is actually running for State House, I believe, out there in the, I believe, the Glen Ellen Lombard district out there. So whatever side of the aisle you are on, you live there or you live across the country, get out there, cast your vote. It's a good thing, doing your civic duty. You feel good at the end of it. Then go reward yourself, maybe with a nice cup of coffee or a cookie or something like that, because you earned it. But you mentioned, of course, the downgrade. There's actually been a series of downgrades for Apple. Their first one came last week. I think it was Merrill Lynch. Yeah, they downgraded them on Friday. That didn't help with the initial sell-off. They were off over 6% after in the wake of that, 6.6% actually. And then today it was, who's joining on the downgrade train? Oh, Rosenblatt Securities. They're also coming in saying that they're disappointed with the guidance and the phone sales. And again, this is why I pointed out last week. This is, I think, the thing that's really concerning a lot of the analysts is not just the downgrade and the poor guidance, but going forward, they said they're going to offer less transparency. And that's usually a warning bell for a lot of the analysts when they're not going to break out phone sales in your future financial reports, the big key driver for your business. They're going to lump it all together in some kind of aggregated hardware number with iPads and a bunch of other nonsense. Then analysts tend not to like that. And they respond with this. They respond with downgrades. So that's what Apple is kind of reaping what it sows now out there a little bit. Again, we take a dismal view of analysts here on the show, but the market's clearly, if the bears have been looking for a reason to sink their claws into Apple, and clearly they got their second reason out here today. Let's see what, oh, look at that. Look at that. We talk Apple and who should appear to join the conversation. But the rockiest of lobsters, Mr. Andrew Giovinazzi, from the land of the pit. Mr. Rock Lobster, see, your ears must have been burning because we're talking Apple. I know it's your favorite holding, sir.
I don't know if it's my favorite holding, but they've given it quite a shellacking, haven't they, from those lofty highs?
I believe that is the technical term. It's below $1 trillion. How dare they?
It's below $1 trillion, and they sell a lot of iPhones, and we're still waiting for their next big product to come of age. But you know what? I still think that somehow Apple is going to create some sort of ecosystem, and I think, but I'm not positive, that the medical industry will be the next thing they upend. Medical information stuff. That's my next guess. So
medical information stuff. Is that the MIS sector?
I don't know what it is. I just think, they've got an ecosystem with X number of people on it. You haven't heard anything about it, except they are doing, like, some stuff is coming from the Apple Watch. You have the pulse and insulin type stuff. So that stuff is kind of, it seems to be happening a little too quietly for me. So I know, they try to do we're looking for them to kind of get on the next thing, but I'm wondering if their next thing isn't necessarily the new piece of hardware, but it's the new piece of additive software to their ecosystem they've created. That's my, but it has to, but I think in order for them to be a disruptor like they were in music and in telephones, and I don't know if we could say computers, and obviously tablets, they kind of invented that. But I'm thinking it would have to kind of sneak in the back door that way. They're going to try to get more dollars out of the current ecosystem they have, and they would have to go to a whole new industry, right? Because they kind of have telecom locked up. They got the app gig locked up on their phone, so it has to. Their next major play has to be into something that, for Apple, has enough. What I used when I was working in software for a few years, TAM. What is that? That is total. Anyway, it's an acronym for basically a total available market. That's why it's been a while. So they need something huge. And what are the biggest areas that they that they can do in technology, like medical technology? That would be. So I mean, they're connected to everybody. If they sell a lot more watches with more gigas on it, So I don't know anything but my own crazy rock lobstery guesses and suppositions. But they still sell a ton of phones. They still make a lot of money, and everybody's worried about nobody buying iPhones anymore. But I mean, how many earnings have we seen this in Apple where everybody's like, "Oh, the phone is done. It's not growing as fast as we thought." They sell it off a bunch, and it comes right back, and there you go. All of a sudden, you got some action.
You got some action. In fact, I just put it out to our audience, a little quick flash poll. We'll check on the results a little bit towards the end of the show here. But I just said to them quite simply, what are you feeling right now in all this Apple downgrade frenzy? You got your claws out, your bear claws out, or do you think, AKA, do you think, I gave you a simple question. Is it going to be above or below $200 1 year from now? So a year from now, out to early November. right around election day, this time next year for whatever elections are going on the off-cycle brand there. But do you think this will be above 200 or below 200? Very simple, very easy question. Let us know what you think. Vote over there at options while we keep on rolling. Aside from all things Apple, Mr. Rock Lobster, anything catching your eye? We're a little bit off of the danger zone in VIX land, so what's catching your eye out there, sir?
We're off the danger zone. We're back in zone 3 from zone 4, and we're waiting for the election. And, I mean, how about the action we had last week when we heard that just the random tweet that, oh, yeah, you know, Z and I are having a good conversation, and the trade thing, yeah, we're gonna have something here pretty soon. And the market rallied like, 3% or something. Everybody was crazy happy. And, I mean, I think the best trade is every time they say positive news about trade, just wait till the end of the day and put on a fly or something and just fade the whole thing.
Yeah, they'll crap the hell out of that positive news.
Until it's locked up, you know, it's not going to happen. So...
You know what is going to happen, though, is some decent volume out there in the options universe. We touched on the futures volume over there on the old VolViews program last week, but OCC put out the numbers late last week for the month of October. And spoiler alert, it was a pretty good month, as you might expect, with all this tumult. It was quite literally a Rocktober, to use the oft-abused cliche, even though it was very apt this year. A lot of contracts changing hands. 567 million contracts. That's a lot in October. That's up nearly 50% from 1 year ago, about 49%. The fourth highest single-day volume in history. That was on October 21st with just a tick under 38 million contracts. The cleared futures volume also a lone bright spot. We got to that on VolViews. We'll get to that again in a little bit. Let's drill down a little bit, though, into our neck of the woods, of course, the listed options. OCC clears a lot of stuff. They do stock loan. Kick all that out. Let's just look at the options for now. Let's see. Overall, exchange-listed options volume, 555.6 million contracts. Again, that's up 49.7% from this time last year. Let's drill down a little bit farther. Equity options volume, 492.2 million contracts. That's a almost 51% increase from October of last year. Inside that number, we see cleared ETF options volume, about 231 million contracts. That's an 83.4% increase so nearly doubling from October of last year. Again, part of that is October last year could have been a little bit anemic, so there's a little bit of frame reference issue there, but still, almost doubling from October of last year. Drill down a little bit further. We got index options volume up nearly 43%. That's 63.3 million contracts. Again, index options, if you've been paying attention to this show for a while, you know, index options have been a little bit of a dark spot in the options volume, and they have not been growing at the steady pace that the rest of the market has this year. But that little bump, that little boost this month actually put some year-to-date ADV up 12.2% from this time last year. So the October kind of a rising tide lifting all boats out there. Futures, you mentioned earlier, again, that's another one. There's been two kind of dark spots this year. The index numbers and the futures have been just a black hole. Ever since February, we've seen no volume. Again, OCC only clears a select number of futures, including the Bitcoin contracts on the CBOE and indeed the VIX futures from the CBOE, and that's where the lion's share of that paper is coming from. Those numbers also looking good, up 17% from October last year at 12.2 million contracts. If you've been listening, you know, every month has been down staggering percents, 20, 30, 40%. This month, not so much, up. Year to date, futures down still nearly 25% ADV, talking ADV now, from last year. So again, that's not exactly the bright spot, but they need a few more months like October to try to right the ship out there. I don't know, Mr. Rock Lobster, Mr. Uncle Mike, anything surprising to you in those numbers? Is that kind of what you expected from the rockingest of Rocktobers that we've had for some time?
I would say it does not surprise me. It should be doing a lot, and like we've said here many times, I believe they still miss that XIV and SVXY and UVXY. I think they miss all the volume in those ETFs.
Yeah, I'm sure if the folks at the SIBO, they had their way, would like to reinstate some of those. I'm sure they like a lot of things right now, given what's been going on over there. But that's all conversations for another day. Let's instead keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Let's kick things off with the Odd Block. This is where we get weird. It's where we get a little wild. We get a little whimsical sometimes as well, to throw all the W adjectives out there. And we kick things off in the place we like to. One of the names that it just steadfastly delivers. Volume, volatility, madness, headlines, all of the above. Pick your area, it delivers. We're talking, of course, the old T. Yes, Tesla. This today, let's see, down, a whopping 8 handles or 2.3%. At a mere 338, if you were listening, you're paying attention to Tesla. Just a week or change ago, it was around 250? So, the winds of change, how they blow out there in Tesla land. But we like to look at a very specific element of those winds, listeners. These are the downside puts. And again, I'm playing with this new, little bit of a new interface here from the folks over there at Liveball. It's got a lot more functionality. It's a lot cooler. I will say that for them. The downside is it's a lot more of a pain in the old rumpus to get what I want to see to show up. There we go. I want my downside puts. That's what we're looking at. So yeah, let's go out here to Tesla land. Let's start. And of course, they show me every put on the planet as opposed to the ones that I actually want. Let's go to the Jan 50. Let's see if I click on that. Yes, okay, that'll tell me something. Jan 50 puts, if you're wondering right now, they're trading a whopping 19 cents. A whole 71 hitting the tape, but OI is where the action is. 70,000 still on the tape. I mentioned about 4,000 and change traded last week on our last show. That looked like that was clearly closing because the OI was around 75 last time. So at least 4,000 or so people out there, 4,000 contracts giving up the ghost out there in Tesla land. Overall, not a huge amount of paper lighting it up out here on those puts. Let's go instead out to a little bit farther, shall we? And let's see if I can find it with this new setup. All right, let's go to Jan 2020 instead, and let's see what's cooking out there. We got the Jan 2020 50 puts. These are trading $3.50, a whopping 60. So this is interesting. Usually on a day like today, big downside, big red on the screen, we see some action in these puts. Today, it does not appear to be the case, which is intriguing. Let's go to the quarter puts out there in 2020 as well. We got a whopping 8 on the tape. The par puts, also some action usually in those. Those have about 218. Those are a little bit meatier. Those are threatening $9. And let's go to our old friends, the 10 puts, because those always print. Oh, yes, doing 400 and change, about 45 cents for the 10 puts out there in Tesla. All right, let's keep on rolling. Another T name out here. Let's go to, if it can come up, which it apparently, can it come up? You know what? Let's go. We're going to talk about True, ladies and gentlemen. Ticker symbol True. Let me scroll down here to the options stats. All right, this thing is averaging about, a whopping 500 contracts a day, 495 to be precise. Today, doing 14,157. Pretty much all of that, 14,133, coming in one big block out there on the puts. Yes, D60 puts. Looks like Mr. Rock Lobster's old school line in the sand puts, but we won't know for sure until we look at the old chart out here. Yes, the D60 puts going up a block for 14,000 and change for 60.1 cents, listeners out there. Big sweep, all opening here, way below the bid. These were 75-cent bid when these puts went up. So clearly, a lot of aggressive action. Let's see. Let's cross our fingers, listeners, and let's see if I can find myself a good chart so I can figure out, yes, here's a chart. All right, there we go. Let's see if I can change the frame of reference to go beyond a month to a year. There we go. All right, look at that. success. A year ago, listeners, it was trading $53.90. So, by the way, it's trading 66.5 today, off about $1 and change. It got as high as, looks like, up to, what is that, 68, almost $70. It did hit 70 very briefly back, looks like a couple of months ago. Actually, yeah, September. Hit 70 very briefly, now back off that again. Maybe someone deciding they want to pick themselves up a little bit of some stock at some 60. Mr. Rock Lobster, what say you, sir? I think this is do you like the line in the sand? You're the line in the sand guy. Yes, you kind of helped coin that. I'll give you a little bit of credit. What do you think these fall into that category, or is there something else afoot, sir?
I finally get credit for one of the things, the names that I have come up with. Are
there others? Are there others I'm neglecting? By all means, sir, regale me with the many things you have created over the years, sir. I am wrapped with attention.
Doing stuff?
All right, doing stuff. I'll give you that.
All right, see, that's two. There you go. All right. Anyway.
I kind of took that and I coined your juice for free things. That's kind of on me, even though it was loosely inspired by you.
Okay, so that's three. So that's
actually
some
2.25. I'll give you. How about that?
2.25. Okay, all right. Well, at least it's not as far off as my crystal ball prognostication. However, I'm sure our listeners want to know what the heck is going on with these puts, and is this, to me, looks like true. Is this some financial credit company, kind of like TransUnion? I think this is the old. Don't they credit scores and stuff like that? I could have sworn something like that. And it certainly looks like a line in the sand put, doesn't it? It has all of the hallmarks of a line in the sand put. You have all the scummy volume. So this is my favorite. You have the scummy volume at 75 cents. Trades, 75 cents, 75 cents, 75 cents. And then it trades 60 cents. And then the bid is now 55 cents. So I think somebody knew they were going to trade 60. So they sold everything they could at 75. And then 14,000 trade 60 cents. So that means everybody who paid 75, that was only 100 contracts. They lose instantaneously as they suck on their 60-cent purchase for a huge amount. So I do believe that is a line in the sand put that does just fall under my 1% a month rule. Not quite there, but all in, you sell the puts, take delivery at $60 in TRU. So I think it's an aggressive line in the sand. But I think somebody wants this stock.
Does seem that is a fairly aggressive. Usually we see them a little bit, at or below where that, at least in our near-term 52-week frame of reference, somewhere at or below that 52-week bottom, but they're well above it. So yeah, I kind of get the same inclination, sir, that they're okay with getting some of that stock put to them. Are you guys okay with that? Do you guys trade this one? Hit us up. Let us know. Well, let's keep rolling. We actually got so busy last show talking about a lot of earnings with our buddy Matt from Morass. We didn't get a chance to finish all the alerts we had from that show, so we're going to hit on a couple of those really quickly as well. Excuse me, including our old friend. We haven't talked about this one on the show in quite some time. This goes back, I believe, to like the Zynga day. I believe you were a fan of this one for a while there too, Mr. Rock Lobster. This is Zynga. They of the infamy for a lot of the mobile gaming out there. Haven't heard them in the headlines as much anymore. Probably one of the reasons why their stock is as anemic as it is. Today, trading $3.69, off about 7 cents, or nearly 2%. Back last week, though, on Thursday, when we were talking about it, we saw someone coming in liking themselves some calls. In particular, again, ticker symbol Zynga, ZNGA. This is a name that averages, again, we got to do this little bit of a dance here, average volume. There we go. 8,800 contracts a day, heavily biased towards the calls, about 7,300 of that in the calls every given day. And we saw a bunch of that last week as well. It was the June 4 calls, which caught our attention, listeners, to the tune of 2 blocks, one for about 19,000, another one for about 5,000. Pretty much lifting offers or going through them. The 19,000 going through the offer by about a penny. And, the spread was pretty tight. It was 37 to 38. So take from that what you will. That's pretty tight for out-of-the-money calls. Actually, at the time, they were probably close to at-the-money calls in Zynga. And then we saw them widening it out a little bit once that got hit. 27 at 37, and then someone coming in, which is weird. This whole thing is kind of weird. If they were coming in, if they are indeed lifting this offer, then them coming in with a much dramatically lower bid the second time. It's kind of odd. Also weird to see that looking at these calls today, we've got, they're still open, 25,600 of those open on that strike, so a lot of paper there. And they're bid out, which is kind of weird. They're 42 at 44. So the stock's down. Let's see exactly where are we on the chart. Let's go back from the year. Let's go back to just 1 month. Maybe that'll make things a little bit easier. Yeah, so on Friday, the stock was $4.02. On Thursday when we were talking about it, it was about, less than that somehow. 3. It's hard to tell on this chart. Actually, no, it was 3. Looks like it was, 390 or so. And then today, 370, 369 or so. So, Mr. Rock Lobster, let's go a whole year first before we do the full dive in here. So, a year ago, it was $3.86, so a little bit north of where it is right now. It topped out, looks like around $4.50 back in, when is that? June. This is a tiny chart I'm reading, listeners, here, so bear in mind with me. And then it did it again around July, hitting around that 4.5 level. That seems to be the upside for the past year or so. Then getting back down in the dark days. Let's see, how low did it get? About 320 or so. So it's had a bit of about a little more than a handle range, which is a lot for a $4 stock. And we're seeing someone, looks like Mr. Rock Lobster, someone coming in, looks like gobbling up these calls, but all sorts of weirdness resulting as a fact. Now the stock is, almost 30 odd cents lower, and these calls are bid higher. All sorts of weird. So yeah, he bought them, the stock's down, but he's looking good on his calls to the tune of about a nickel. I don't know, Mr. Rock Lobster, what is your spidey sense telling you on this one?
I look at this one, and it's the same reason Zynga basically at one time just traded for the value, I think, of their real estate in San Francisco.
Yeah, used to love this one for a while there.
Well, and then when they were going to do it was decent to trade because it looked like they might start monetizing their gaming, had real dollar gaming behind their real dollar online gaming, and then they abandoned that, and the stock hasn't gone anywhere. But in reality, now it's just it's weird. It's like a value stock. It owns a bed huge at pretty awesome piece of property, I think, somewhere in the Mission or in downtown San Francisco or wherever they whatever building they have. I don't know if they've sold it to lease it back or whatever. Who knows? But it's just one of those where it kind of keeps crawling along, and I think. I think somebody wants, I think it's like, maybe a fund like a value play fund that wants a lot of leverage. It feels kind of biased to me. You don't really sell a June 4 call in a $3.69 stock for 38 cents. I mean, granted, it's 10% of the value of the underlying, but I mean, do you really sell a call on a $3 stock for 38 cents or almost a $4? It's like, it's too. I mean, it's right at the money, and I guess, they could, it could all work out somehow. And, if it rallies, they'd still would do okay. But it feels like this is mostly those are calls being purchased.
Has that feel, and it seems like they're still bid up. So, hey, these calls are insulated from sell-offs. Go figure. Stock gets hit. I don't know, looks like around 10%. And let's bid these calls up. Why not? Let's do it. That's how it works, right? All right. I agree with you, though. It doesn't really harvesting that kind of harvesting that amount of premium in a name like this, particularly all the way out to June. You tying up a lot of capital for. I mean, it could be overriding, but then that's what's the point of holding it at that point? All right. But then again, where do things have happened? We talked this call, the odd block, for a reason. Let's finish things up with another one that came on our radar on the last show. I didn't get a chance to talk about it. This is ETM. I think this newcomer to the odd block, Entercom Communications Corp. This trading today, $7.57, pretty much unched. But, of course, we saw them come up on our radar last Thursday when someone was doing the old call gobble, looks like, to the tune of 15,000 of the Dece 8s. So out of the money, near out of the money calls in December, 15,000 of them going up for a whopping quarter. Pretty much looks like opening. Yeah, it was opening. Was a late print on the offer. Earnings are on the 6th, so this could definitely be considered an earnings trade going up tomorrow, obviously. And let's see, yeah, so there's now as of Monday, there's about 17,000 calls open on the 8 strike and about 18,000 open on the 9 strike. So a lot of calls open here on this roughly $8 name here. Let's go back again. Let's do the old chart. Oh, by the way, this name averages about 1,600 contracts a day. So 15,000, that's a good print for this. That's a good print for a lot of names, but this one in particular looks pretty good. Let's bring up the chart. Let's see if I could wrestle it a little easier this time, listeners, to make it a little easier to read. No, I did the wrong thing. All right, but I still can see it. It's a little bit bigger here. A year ago, it was trading $10.65, and then looks like it got as low as, $7.37 maybe back in the June time frame. Seems like it. It's hard to tell exactly what the heck this thing is showing me. Actually, no, I can't tell if that's 580 or not. But looks like it might have been. It potentially got down to 580 if this chart legend is correct. Hard to tell. Again, it's a little small widget I'm trying to read here in 2 seconds. I'm going to figure this out a little bit more for you. Oh, that looks a little better. There we go. Oh, this is a 1 day interval. I don't want that. We don't want 1 day. We want one. All right, forget this thing. Mr. Rock Lobster. I'm going to play around with this a little bit. What's your take on these? Opening earnings call up here or something else?
I think you're doing battle with your platform today.
I am. That's why I kept the old interface. I feel bad because the new interface actually has a lot more stuff going on in it. I like it. It's what I've been asking for a long time. Problem is, it just takes a while to configure, and I haven't had a chance to do that yet. So being forced to use it on the fly has not been conducive to content, shall we say.
I don't like hearing you struggle, but I know Kyle's going to edit it out, so it'll be okay. ETM, again, another weird name I've never heard of. Are we winning the small stock, the tiny stock? Gambit here with the with some of the volume on this stuff. This one, again, I'm thinking maybe, they're paying up through the offer. So, we've seen this market sells off 10%, which I think is we're a little less than that now, but we were definitely close to 10%, if not right around there at some point. So I'm just going to say some good old fashioned scooping here and trying to scoop some earnings. I mean, this stock pays a dividend. I wonder if this company was renamed. Was it used to called something else at some point? Entercon. I don't remember an Entercon. It's a radio broadcasting company. Interesting.
If I could find a fundamentals tab, I would tell you. Unfortunately, I cannot.
Yeah, I know, but it's not. But it's one of these, again, little value play earnings coming out. So I assume somebody's buying it. It's one of these things where it's got like the high book value. It's got cash. So I'm not quite sure what the deal is with it, but it does look like somebody's trying to. This is feeling very scoopish on these options, considering where this thing traded about a year ago.
Yeah, I got the chart working now. It's a high of about 1170 or so back in November of a year, almost exactly a year ago, and it got as low of around 590 or so. So yeah, down in that range. So yeah, it's been actually recently hit 591. So yeah, it's kind of been flirting with those lows, and these days looking a little bit higher than that. So yeah, maybe someone has popped quite a bit just in the last few weeks here. So someone obviously thinking the the upside train is going to keep on rolling, and we're going to keep on rolling right on into the block of strategery known as the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. This is the portion of the show where you get ready, you put on your listening pants, while Uncle Mike regales you with some options, wit, and or wisdom. If you ever said to yourself, I wonder how I can kind of knock myself out trading options, just a pure KO, Uncle Mike's got you covered in today's Strategy Block. Uncle Mike, sir, have at it. What do you got? You talking about jabs, roundhouses? What's on the docket today?
Oh, we have all sorts of things going on today, by all means. But what I want to go over today is something that we like to refer to as a knockout collar. So a little bit of the history of today's strategy block and what inspired me. Many years ago, one time I had a client call me. He was maybe a little bit disappointed in his rates of return. He was making money, but we had a bull market, but we were underperforming. But on that, based upon our risk analysis and what he'd wanted and what we wanted to do with him, we were in the right things. And so I said, well, Mr. Client, if you want to make higher returns, of course, we'll have to make some adjustments to this trade and the strategy that we're doing. There will be more risk involved. And what he said what everybody else on the planet wants to say, but typically doesn't. And his response was, I'm totally fine. And he was dead serious about this. He said, Mike, I am totally fine taking on more risk so long as it makes money. And that's how we all feel. I want to have my cake and eat it too. I want to make more money, but I don't want to lose money. So if it's more risky, that's fine if it makes money. But if it loses money, then I'm not okay with it. So what I constantly battle with in my life as a financial advisor, and what I'm trying to do is, how on earth does the client have his cake and eat it too? Well, of course, you can buy put options, but then how do you finance the put options? Well, that's kind of how I spend my days, trying to figure out ways of financing put options, or maybe not put as much money at risk, put it into something more safe, like we've talked about on the show before, and only use calls. I mean, there's a variety of ways with which to do it. Now, recently, I was talking with a client, and one section of their portfolio, an unhedged section, had come down in value a little bit over the course of the last month. Now, it was well within the risk parameters of what we were looking to do. The hedged sections were doing fine. The aggressive section has actually held up very well during this recent pullback. Very excited for the hopes of that going into the last 2 months of the year. But in the unhedged section of the portfolio, it came back a little bit. And so we talked for a while, wonderful client. And after talking, we decided that we wanted to do something to kind of work as a hedge for the portfolio, but still have a little bit of upside on it. So what we decided to go with is something with which we refer to as a knockout collar. And on there's still, it's not quite as simple as the way with which I'm going to explain it. But this is the general concept of what we were looking to do. So in looking at XYZ stock, let's say it's trading at $70 per share. And it's a stock that you like for the long term, meaning if it does have a pullback, you're thinking, okay, I still want to be in this, but oh man, I just can't handle another pullback, or if the market comes down a little bit, I just want to have something in place. Now, after looking at this stock, we determined, if I like this stock at 70, I think I would really love it at 60. If it's that type of a stock, then a knockout collar might be the right thing for you. Now, here's how it works. A traditional collar and a knockout collar, at least the way that I do them, both involve selling an out-of-the-money covered call. So let's start off by selling the 75 covered call for, we'll just say, $1. Now, what's your time frame, whether it's 1 month, 2 months, 4 months, a year, whatever the case may be? You can do this in any time frame, but we'll just make it all in the same time frame, and you can use your own imagination, whether you're near-term, long-term, or whatever you're looking to do. Now, a traditional collar would then dictate that we take that $1 that we sold the 75 call for, and we buy perhaps a 65 call or a 60 call or whatever the market gives you. Well, in this case, we're not looking for doomsday protection. We're not concerned about the stock going down to 20 or 30 or something along those lines. We are just concerned with just the near-term market volatility and where it can go in the near term. Because once again, if we like it at 70, we love it at 60. So instead of buying a 65 put for $1, what we decide to do is we buy a 70 put for, we'll just say, $2. And with that, if we were to just do that, we are $1 in the debit because we sold the 75 call for $1 and we bought the 70 put for $2. So with that, of course, we don't want to pay money for an option. That's just the most evil thing ever. You'll be cursed by every other option trader around. People won't look at you when you go into parties. I mean, it's just an awful thing if you ever pay premium for an option. I mean, you're just an evil human being if you ever pay any premium for an option, by gosh. So with that, fear not. What we're going to do in this trade is we're going to sell a 65 put for $1. So essentially what we've done is we've bought the 70-65 put spread for $1. $2 for the 70, selling the 65 for $1. And that gives us the cost of that 70-65 put spread. And to finance the cost of it, we've given up the upside at 75. Now, what does this do? Well, of course, if the stock goes to 110, you're going to be upset with yourself, and it's not going to be what you wanted, but that's a risk with which you take when doing a covered call. But what this does is this gives you the chance to have at least $5 of upside. Now, whether that's within your target or not, obviously it depends on the stock, your strategy, your goals, your risks, that type of thing. But this gives you the ability to have $5 of potential upside. Stock stays the same. The only thing that you're out is the commission costs. But if the stock goes lower, what if it goes down to the 66, 64 level, something along those lines, and you hold this trade until expiration or pretty close to it, then you do not have that pain. You do not feel that pain because you have protection down to the 65 level. Oh, and remember how if you like the stock at 70, you'd love it at 60? Well, right there, you have the ability to stay in that stock that you love, and it didn't hurt you anything from the downturn from 70 to 65. So in this marketplace, this is something with which to think about if you want to have a little bit of protection in place, not doomsday, but if we do have another leg down or another pullback similar to what we had in October, this is something with which to consider if you're looking for some type of protection to a relatively minor pullback in the marketplace. And you really won't be cursed if you pay money for an option in some way, shape, or form. That's just what the premium sellers want you to think. That is all for now today, folks, on the strategy block.
Unless my buddy Don Schlesinger comes on, then he will curse you out live and on the air for deigning to spend money on an option. All right, we're coming up against, we got a little time. Let's do some quick check-ins with a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, I mentioned at the top of the show, we did a couple of quick audience polls. One of them's a flash poll, so it's going away pretty soon. The other one last is our regular question of the week, so that one runs a little bit longer. We'll start with our flash poll because it's kind of intrigued by this. Pretty easy question, but also a lot baked into the analysis there. We asked you quite simply, Apple's below $1 trillion. Heresy for the believers anyway out there. You guys have your claws out, or are you gobbling up these Apple levels? Quite simply, a year from now, it's right around $200 right now. Above or below 200, what are you feeling 1 year from today? Over 3/4 of you saying, yes, of course, above 200. 15% of you saying nope, below. Only 8% saying you're sick of Apple. I thought for sure that part would have much more resonance with you out there. So again, that one goes away pretty quick if you want to vote. It'll take a lot of voting to change the percentages at this point, but you could get out there, make your voice heard in the next. I think you got 12 or so hours to make that one sing. Going on over to our question of the week. Here we like to take our pulse of our audience here. And we check in on certain topics a few times a year to see kind of what you guys are feeling, if your tastes have evolved or changed since the last time. I haven't done this one in a little while, so I thought we'd check back in on this one. Quite simple, checking your pulse on your go-to, your favorite options. Bit of strategy. It's got out of the strategy block, so well-timed on this set. I gave you 4 choices. Again, there's a plethora, there's a legion out there. You guys can write in with your favorites. You already have done so with some of those. But we gave you 4 main ones to sink your teeth into. Butterflies, covered call / short put. If you don't know why those 2 are in the same choice, then go check out our Options Bootcamp show. Haven't done a new one in a while, but there's a good archives there for you guys to check out. Verticals could be call or put. We don't judge. Or indeed the old calendar / diagonal. Interesting stuff. Let's go back around the horn. Mr. Rock Lobster, we'll start with you. What is your vote if you have one, if you have a go-to? And then B, what do you think, more importantly, what do you think our audience is voting for?
If I have a go-to, oh my gosh. Yeah, it's like, this is always tough. Like, what's my favorite strategy? You know, it's like
it's a hard question. We ask the hard ones here.
Yeah, the ones that make money. That's my favorite strategy. Because the hard thing for me, and this is overall, is options should be put on with vol conditions and underlying conditions, and that's why I think the strategy focused in the industry is all messed up. That's my soapbox, but I'm getting off it. So I would say, ultimately though, I end up selling a lot of puts and a lot of protected type put
you
trades.
diehard premium harvester, you.
So, you know, and again, for like Tosaw says, if you love it at 70, you like it at 60, and that's not very, but I prefer when I feel there's a little bit of a bargain. So as far as I do like owning premium when the price is right, especially in the vol products when it really can move. But in this one, the covered call, short put, still selling puts when the time is right, is I think a great idea. As long as you can take delivery, you gotta, the whole key is you can't be shaken out of the trade, or you have to stop yourself out of the trade. So I'm going to say that one. I'm going to say everybody likes it too, to be honest.
Yeah, I'm with you on the definitely on the strategy focus. We've said that many times on the show. You should have many different weapons in your arsenal, many different tools in your toolbox, because not every tool applies to every different scenario. But that said, there's usually something people end up going back to more frequently than others. And that's kind of what we're picking your brains about here this week. Mr. Uncle Mike, same question for you, sir. If you have a favorite of these, or maybe you have a different suggestion you want to suggest, have at it, sir. And more importantly, what do you think our audience is picking?
Audience is picking being a premium seller, I think, in terms of short puts / covered calls is what I will say. Well, we're selling puts, selling verticals, one of those two. So I'm torn on that. So you know what? I'll lean towards selling verticals for our audience. In terms of what I do, I am strategy neutral, meaning that I like keeping strategies fairly simple. And a lot of times whenever I see clients with accounts that have 17 different option positions on 32 different stocks, and I keep scrolling and scrolling and scrolling and trying to just look at this, figure out, okay, what are they trying to do with this? A lot of times that typically doesn't end well. Now, with that, clients that have lots and lots and lots of different stocks and have similar strategies on all of them and have maybe like 2 to 4 positions on each individual stock, from my 15 years of doing this, of being in this business, that typically tends to work a little bit better. Me personally, whatever the market gives me, I will do it. If we have a 9 VIX, I really have a hard time being a put seller. On SPY anyway. I'm sure there's always some stocks that can be different on. When we have a 40 VIX, my strategy a lot of the times, if we get into situations like that, I'm going to try my best to be in cash or maybe buying some really low-priced spreads of some sort just to kind of stay away from that craziness. So this year, I think within the last year, I've done butterflies, I've done call spreads, I've done put spreads, I've done calendars, I've done diagonals. I think I have not done a condor in many years, a traditional short iron condor. But aside from that, and nothing against the condor, it has its place. But aside from that, I think I've done pretty much every basic strategy that we talk about all the time on this show. So I am strategy neutral, but I will say that our listeners tend to go towards selling vertical spreads with short puts and covered calls as a close second.
Yeah, so I thought the premium harvesting, we only specified direction for one of them. That was a covered call or short put. The rest could be, so verticals could be buying or selling, butterflies, buying or selling, calendars. Covered call, short put, those kind of imply a certain direction. So those two are directionally oriented, but the others don't in terms of premium. So yeah, I thought for sure the premium harvesting would be blowing the doors off. Again, it just went live right before the show, so it just started. These numbers could obviously ebb and flow throughout the week. But in the early voting, verticals blowing the doors off, 61%. Call or put verticals, they don't care. They're trading them. They're trading them up size. Calendars, diagonals, number 2, 22%. Wow, fascinating. different than I would have assumed and different than our previous poll. Again, this is early voting, so I think this is going to evolve. Only 11% for covered call / short put. I think that number definitely is going to grow. And 6% for flies. I would have picked covered call, short put number 1, then probably verticals, then flies, and then calendars last. So go figure. I love it. That's why I like talking to you guys, because you guys always throw a wrench into the works at a curveball, which makes it fun. Meanwhile, it's time for us to throw a curveball at you, perhaps. We'll see. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block portion of the show. We tell you what we're watching for the rest of the week. I'll let everyone else get into their stuff in a minute here. Still got some earnings popping off. We're not done, not by a long shot, listeners. We got tomorrow, Tuesday, or today after the bell. We got Marriott. Looks like. Let's see. Yeah, they're Marriott after the bell. Tomorrow we got Eli Lilly, CVS, Gogo, everyone's favorite, Etsy, for the crafty ones out there. Papa John's if you're a pizza aficionado. Wednesday, the old Groupon, Roku, and Square. Thursday, Dropbox, Walt Disney, amongst others. So a lot of big names still popping off this week for you guys to sink your teeth into if you are indeed the hardcore earnings traders, and we know you're out there. All right, let's go back around the horn. Let's start with the rockster, the lobster that rocks. Mr. Rock Lobster, I know you're watching yourself some VIX zones, maybe some Trump tweets, maybe a little bit of earnings. What's on your radar this week, sir?
So 2 things. One is Apple volatility is crazy high because I think it's in a really funky place. So, I mean, if you like selling options, I don't know why it's still so high after earnings. Maybe the fact that it's dropped another, $10 or something today. So there's that. And then the second part is ultimately, we have this thing called the election, and I think that is a big part of that is just one more piece of the vol puzzle. And when the election is over, everybody will know what's happening, and and they will move forward. And I think that's probably when we start seeing the vol into the teens again by the end of the week. So my crystal ball vol for the end of the week is 16.01, even though I can't play. You
didn't play. Your buddy, your cohort there, the meatball, he wanted a 15-25 strangle in VIX. And he wanted to buy it, so that wouldn't have worked out too well for him, I don't think. But yeah, interesting stuff. So you're still of that belief then that it's the midterms that are kind of keeping that VIX futures elevated?
I think that's the biggest thing. I mean, look, the last election, everybody's like, oh, Hillary's going to win. It's a shoe-in. And then all of a sudden, and then vol went crazy, right?
Ghosts of Hillary past coming back to spook us. There's not much else really lurking out there in terms of, obviously the Apple already happened. We saw non-farms. Those are 2 big events. People were saying that was keeping the VIX futures a little bit juicy. And those are done. So be right. Apple's still juicy. Of course, there's the ever-present Trump tweet risk. But that's any given day. So
right, that's a daily. That's the new intraday vol risk. That's a different type.
That's structural volatility.
So it is structural volatility now. But I would assume that. But that's the big stuff, and we'll see. And I think if Apple vol settles down, the Qs will probably settle down just at a lower level, and then everybody will go back and say, oh wow, can technology companies make money next quarter? And we'll go kind of back on our way. But everything got revalued. I think Amazon really was the biggest revalue. They took $500 out of the stock, $400 out of the stock, maybe a little more than $400. So they took 20% out. That sounds good for right now, and we will see where we go in the future. What is that? $200 billion clipped right off the top.
There you go.
Easy cheesy.
Chump change for Mr. Bezos. Mr. Uncle Mike, same question for you, sir. What are you watching for the rest of this week till we gather again on Thursday?
The elections are the big story. Here's what's going to be interesting about it now is that a lot of the polls were wrong 2 years ago. And I'm going to be curious to see if throughout the day it looks like the Democrats are leading in exit polls, if Trump then accuses it of being fake news, and the tweets that are going to come out with this, as well as Fox News is going to declare the Republicans the winners, CNN is going to declare all the Democrats the winners, and it's going to be very unique to see what actually ends up happening throughout the day, and this is probably going to be one of the most fascinating midterm elections that we've had in many years, I think.
All right, everybody. Unfortunately, that music means we've come to the end of another epic sojourn through the world of options. Talk some odd block, talk some craziness out there in the volatility lands. Talk a lot of Apple, Go Figure, and a bunch of other stuff. Talk some knockout collars if you're so inclined. So a lot for your options edification enjoyment here on today's show. But before we go, some back around the horn. By the way, I buried the lead earlier. I forgot to mention the big name popping off this week on Thursday. Of course, Funko. They maker of all those fantastic pop vinyls out there. So you know you all trade that one. Looks like not having a good day. Off 7.5% to $19. I'm not sure what's going on in pop vinyl land. Clearly not good. Let's go back around the horn. Let's start with Uncle Mike, sir. What's cooking in the land of Uncle Mike, a.k.a. St. Charles Wealth Management?
What the heck do I do now? That is the question that we are going to be answering at the St. Charles Investing Group coming up on November 15th at 7 p.m. in my office. For more information on that, go to meetup.com and look up St. Charles Investment Group, and you can sign up for coming to this meeting. I would love to have you. It's going to be a lot of fun.
Check the man out. Learn about it. Click on the Fox. Maybe you find some good stuff too. stcharleswealth.com. And last but not least, the Rock Lobster, sir. If all these times are causing tumult for me, I'm concerned. I'm terrified. I don't know what to do. I want to take my ball and go home. I don't want to play in these markets. Where should I go? What should I do, sir?
Oh, well, go to Option Pit. You can try our Vol newsletter. You can try our daily Option Pit live chat room where you get to see, again, conditional trading. You can learn how to do it. Gold Platinum, our Gold Platinum Pro class, and our Saturday class on short-term options. This Saturday, we had to move it, but it's there, and it's going to be waiting for you.
There you go, optionpit.com to learn more. If you're listening live, there should be a link popping into the chat any second now telling you where to find the podcast if for some reason you don't subscribe to it already. Of course, just go to theoptionsinsider.com. You'll see all the good stuff there. On the right-hand side, you'll see Option Block there, as well as our other shows. Easiest thing to do, just subscribe in your platform of choice. A lot of you like iTunes. I don't judge. Whatever you like. I like Pocket Cast. Whatever you like to use. Get on out there, grab the network feed. You get all dozen or so shows. Spoiler alert, new one coming soon, all about crypto. I know you guys love it, so we'll be getting into that soon, too. Otherwise, stay tuned to the network. More interviews hitting it this week, a lot of other good stuff. And then we'll see you back here on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.